Uber reporting mixed first quarter results just a few minutes ago. I'm going to go with strong. I'm not going with mixed. Quarterly profit coming in 13 cents per share. It does include, though, several special items that many analysts had built into their forecasts. That number fell short of the 70-cent consensus estimate. However, once you strip out those special items, we can talk about those. The rideshare and delivery firm reported an adjusted profit of 72 cents per share. Investors, though, are focusing on an upbeat bookings forecast for the current quarter. And the market not only moving higher, but Uber moving higher, close to 9% right now. Joining us is Dara Khosrowshahi. He's the CEO of Uber. Dara, it's great to see you. Congrats on what I said was at least looked strong to me, though I do know there are these special items in here, and I don't know if you want to walk through those. But I think of your company to some degree as a barometer of the economy, but to some degree just a machine that keeps operating.
Yeah, I think that's exactly right. And the results were just excellent across the board, Andrew. Transactions, trips were up 20% year on year. So people continue to go places. They continue. The demand for delivery of food, groceries, everything in home continues to be incredibly strong. Our gross bookings were up 21% on a year-on-year basis, $56 billion, growing healthily both in the U.S. and outside of the U.S. And non-GAAP earnings per share, which excludes our equity stakes losing some value, was 72 cents a share, up 44%. And free cash flow over the past 12 months, now getting very, very close to $10 billion. So the company is hitting on all cylinders. We continue to grow. We continue to innovate. And fortunately, the markets are strong, the economies are strong, and hopefully we'll see peace in the Middle East as well. And all that coming together means, hopefully another great year for Uber as we continue to build and innovate.
Real quick, before we go back to the earnings, just because we're watching the stock, and I know you're probably not, and I know you don't like to talk about the stock itself, but it is up about 9% this morning, and I'm trying to understand how much of that you think, as somebody who does watch it and knows it, is a function of the earnings report itself versus the larger moves in the markets and the results of the price of oil coming down, at least in this moment, by about 10%.
Well, it's impossible to identify whether it's market or us. Obviously, a close to 10% move is great in a single day, but we're building for the long term here. And for example, we've been growing top line over 20% for multiple quarters in a row. We continue to grow profits, well above that. And this quarter, we bought back $3 billion worth of stock just in the quarter. So that certainly looks like a good buy so far.
When you look at the health of the consumer and you look at the mobility business versus the food business, what do you see? What's the difference?
Both are strong, Andrew. Actually, mobility for us accelerated. The growth accelerated if you look at Q1 versus Q4 last year, which was really strong. So we're seeing people getting out of the house more. We're seeing particular strength in commute use cases, so people are back in the office. And obviously, Uber is a beneficiary of that. We've got now over 10 million people on our platform, earners, whether they're drivers or they're delivering food or shopping at your local grocery store on our platform as well. So both mobility and delivery continue to grow really strongly. Every quarter I get asked about consumer strength, the barometer of consumer strength, and we watch consumer patterns really closely. Are people taking shorter trips? Are people trading down in terms of the size of their grocery basket, so to speak, or the kinds of restaurants that they're eating in? Are consumers tipping as much as they were? All of those indicators continue to be really strong. The consumer is spending, they're spending locally, and we don't see any signs of that weakening at this point.
So I'm curious, when the war in Iran started, were you thinking to yourself, oh, goodness, this is going to have an impact on our business? I mean, we keep talking about this idea in the country that, on one end you have these energy costs, which don't seem to have impacted consumers the way I think people anticipated. And then on the other end, you have this sort of AI-driven growth machine. And the question is whether that's just so outpacing everything else that we have to worry less about the energy situation coming out of the Middle East.
Yeah, we're always looking for periods, obviously, of stability. And you can argue that the last couple of months certainly have been anything but stable. But I think one of the strengths of Uber is that while we operate globally, we operate in over 70 countries, we are a very local business. So what we see is even obviously we've been through periods of uncertainty many, many times before, but people are still going to work. People are still going to see their friends. People are still eating out or getting food delivered to them. So Uber tends to be relatively shielded from the big, international issues, et cetera. Certainly, we were affected by weather in the first quarter to some extent. The war in the Middle East for our Middle Eastern operations, which are have been historically very, very strong, certainly had an effect. But what had a much larger effect is the general growth of the business, more people coming to the platform, both in the affordable end, two-wheelers and three-wheelers in South America and India,
Right.
and also at the high end, our U4B customers, these are enterprises. The growth there in enterprise grew 2 times as fast as the growth of the overall business, which already was pretty strong. So across the board, whether it's a low end or the high end, whether it's domestic business or international business, we see our platform growing, and it's
Right.
because people like to move and people like, delivery at home.